Good morning from Chicago, traders. It's 8 a.m. Central Time on Wednesday, July 16th, 2014. Thanks for joining me. As always, derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations is subject to change without notice. Past performance is not indicative of future results. Heavy news flow overnight. Let's go over real quick. A lot of things driving the market. To start with, Intel reported yesterday after the close. Q2 it beats. EPS came out at 55 cents versus 52 cents expected. Revenues at 13.8 billion versus 13.71 billion expected. Guides Q3 revenues above consensus and has traded up about 4% in the after-hours markets. Yahoo reported 37 cents versus 38 cents expected. Revenues also came out a bit short, 1.04 billion versus 1.09 billion. It was down about 2.5% after hours. Bank of America Q2 EPS excluding litigation is 41 cents versus 29 cents expected. 19 cents with litigation. That's how expensive litigation is. Just knock off 22 cents per share on their outcome based on the litigation. IBM and Apple announce a partnership, believe it or not. Very interesting. IBM will be selling iPhones and iPads to its business clients. Portugal's regulator, and this is important, Portugal's regulator bans naked short selling of Banco Espírito Santo for Wednesday. Rio Forte, which is a Banco Espírito Santo holding company, is unlikely to repay the 900 million euros owed to Portugaltel, so they're defaulting on some debt that caused a drag overnight. UK May average earnings misses by 0.3 at 0.3% versus 0.5% expected. Wall Street Journal's Hilsenrath came out yesterday and said Yellen hedged her views on rates, defended low rates, but suggested earlier hikes possible if labor market improvement continues. China's Q2 GDP small beat, 7.5% year-on-year versus 7.4% consensus. China June industrial production small beat, 9.2% year-on-year versus 9.0% consensus. EU leaders likely to implement more sanctions against Russia, including wider sanctions on Russian companies, will also cancel economic modernization agreements. US PPI final demand came out just about a half hour ago, 0.4% versus 0.2%, quite a bit stronger. And then Time Warner, TWX, you might want to look at that stock this morning, rejected an $85 per share offer by 21st Century Fox, causing the stock to shoot up 20%. TWX is a component of the NASDAQ 100. The NASDAQ is gapping up as we speak. The NASDAQ futures are gapping up as we speak, approximately 20 points or so, 27 points maybe, 25, 27 points on that news. And then, of course, Charles Schwab just came out with a 23 cents versus 22 cents EPS earnings result. So a lot of stuff. Actually, I had to filter out a lot of things. There's just a lot going on overnight. The news sheet for this morning was a lot longer, but I just wanted to focus on what may be relevant to European and the U.S. markets. Looking ahead, in about 10 minutes, we get industrial production expecting 0.3, cap utilization expecting 79.2%, and manufacturing production expected at 0.3%. That comes out at 8:15 Central. At 9 o'clock Central, NAHB Housing Market Index expected at 50.0. Also at the same time, 9 o'clock, Bank of Canada rate decision expected at 1%. To remain at 1%. 9:30 crude oil negative 2.5 million barrels. Distillates plus 2 million barrels, in gasoline plus 900,000 for those who trade the energies. 9 o'clock, Fed's Yellen to testify in front of the House committee. recall that she was in front of the Senate committee yesterday. Not expecting much new, but still, you still might want to run that and listen in. There may be questions that might reveal something she has not already discussed in yesterday's testimony. At 10 o'clock Central, EU leaders hold a summit. I believe they're releasing a statement at 2 o'clock, I think, 2 o'clock Central Time. And then at 11 o'clock, Fed's Fisher comes out and speaks about monetary policy. At 1 o'clock, we have Fed's Beige Book, and an aftermarket eBay reports expected at 69 cents EPS. So, like I said, there's a ton going on, lots of headline risk. There's some stuff going on in Israel and Gaza and then Iraq and so on. But you can check out the news for that. A quick look at yesterday. So yesterday after market, before leaving, I'd asked a question on Twitter. I forget what the question was exactly. Something like how would you characterize, it says, how would you characterize today's auction? Did the market try higher and fail, or did it establish a good base to go higher? Based on what you see here on the screen, what is your opinion? So with that question, the intent is to establish context. What is the context of what we did yesterday? Did the market try higher and fail, so it's weak, or did it test lower and built a good base to go higher? Of course, now you cheat because you know what happened overnight, and it's trading right now at 1976.50, but this was about 14 hours ago, and the response to that, I got some responses on the Twitter feed, and my response to that is thinking the bigger piece is that it tested lower. So let's look at this a bit. The bigger piece is that it tested lower, closed gap, and found buyers. So it closed this gap that it left behind from a couple days ago, and it found a buyer. This is an excess low here. Very little volume took place, so it moved back into this this balance area that we have here, and it found a buyer, and it came right out of it back into the gap zone. And found buyers. It's setting up to go higher, in my opinion. You can look at my Twitter feed, and you'll see that from about 14 or 13 hours ago, and that's what I expected. This is a big piece. What it did yesterday, it's not the fact that it had 17.5 points of range and really strong volume. Look at the daily volume here. Strongest volume in a while. We have not had 1.7 million since way back here in May. May 15th was the last time we had 1.7 million or better. So yesterday there was some heavy participation with the higher time frame, the OTF, on a pretty decent range. A nice test of the 75. Remember, 75 is a key area. We talked about it yesterday. Nice test of the 75, pushed through by 5 ticks and then sold off. Tried to retest the 75 again, and I tweeted about that in real time, saying that if it's not able to take 75 on a retest, and expect the lows to go, and the prior day's low to go as well. So here's where it is. It pushes to 76.75. This is a 2500 volume chart. A little bit more noisy than a Renko, but actually let me switch to a Renko just to keep the noise level down. It's redrawing. So here's a 76.75, pushes down into the point of control of Monday, which was a completely balanced day. It was almost like a holiday trade. Pushes through by a tick, goes to 75 again, pulls back to the open, and then this is where I said if it's not able to take the 75 on the next push up, then expect it to take out the low and to start moving towards the levels we had below, which were 67.50 67.50, 66.50, and then possibly lower. I'm looking for 64, 63 tests beyond that. And that's what it did. It pushed down through, retest the open again, and then a continuation selling. And this happened on pretty good delta. Delta on the sell side was pretty strong, and so it was a pretty cool to watch that the market is actually auctioning as we'd like it to, just you know, kind of on its own power. So yesterday pushed all the way down, and the context we need to pick up from yesterday, in my opinion, is that we did test through. We went back to the last known value area and rejected it. We found pretty good buyers. You can see the same in the market profile chart. You can see what's called an excess low. An excess low 4 TPOs deep, and the market returns into value. The market rejected prices. It did its job. It found the buyers and started to head up. Okay, so that's the overall context of yesterday. It put in a lower point of control, but this looks like a pretty good base. It's built a pretty good base. I'm looking at 62.75, 63, and 71.50 as the key LVNs. We can get rid of this one. I'm keeping the 75 still. I want to see it tested properly from above to remove it. But yesterday, 62.75, 63, up to this neckline at 71.50 are the key areas. So we want to see what happens today. If it is unable to maintain higher prices, remember what I said about the 75 now. If we take out the 75 and we hold above, then new all-time highs are on deck. And today it certainly isn't far from it. All-time highs are right up here at 78.25. The overnight high at 77.75. So that's just 2 ticks ahead. So it's pretty interesting. My point is pretty interesting trading yesterday, pretty interesting setup, and with the news flow, earnings, and all the stuff that's going on, in addition to economic releases and so on, there's one that's coming out in about a minute and a half. It should be a pretty, I expect it to be a pretty active day, so you want to kind of get rid of any distractions you may have and pay attention. Today, I don't think it's going to be a sleepy day, although we had extra wide range. I don't expect another 17.5 points today, but we are within a stone's throw from new all-time highs, and the market's opening out of value this morning with some interesting news across the board from Europe and earnings and so on. Let's look at what the overnight did so we can complete our story. Our contextual read. Sideways through the Asian session. The Asian session, I got to tell you, for the last 6 months or so, the Asian session hasn't done anything. I mean, somebody, for whomever's trading those Asian hours, it's got to be rougher than it's been trading the U.S. hours. But it just seems like nothing really happens until Europe opens. Europe took a bid right away, pushing higher, a very odd-shaped profile, but a very, very weak high again. Heavy trading at the high. Heavy trading at the high. 3,200 traded on the second to highest price, and then 109 at the highest price. Very fast drop-off. So we'll see what happens. The expectation is that the high will be broken fairly quickly. So looking at the way things are shaping up, let's see, 70, 75. I said 71.25 was the neckline left behind from yesterday, so it's confirmed here overnight with an LVN there. So that's going to be the cutoff point. So the expectation here is that if we get responsive selling immediately on the open, responsive meaning moving prices towards the most recent value area. If we get responsive selling, I expect it to slow down and base in the 71.25 area, and then I expect buyers to step back in and start to either chop it on the way up or take it right up to the overnight high, and then new highs just 2 ticks above that. If it can get to the overnight high, it can certainly get to new highs at that point. If it fails through 71.50, then your targets become obvious at 67.75, and then the field is open all the way down. Well, 66.50 is in play again here, but all the way down to 62.75. I do not expect a wide range day. We have not had 2 consecutive wide range days for a while, since the third week of last month. But I don't expect a wide-ranging day, but there's a lot of news flow today. It's expected, and so anything can happen. But the primary hypothesis is that we do get some responsive selling in an attempt to push back into towards yesterday's value, and that's the ideal situation actually for buyers, is to for the market to test for buyers lower, and then to find a buyers stepping in, and then that creates a decent base for this to go to new highs. Remember, new all-time highs have not been sustained. Generally in the session, new highs are made, and then the market fails to hold those highs. So like this one actually acted pretty good. It's a weak high that we left behind at 78.25, but in general we make new highs and we roll right over, like you see here. 71.75 is new all-time highs, and we roll right over, and that's how it's been. So every time you look back outside of balance at new highs, here's another one, 1960 rolls right over, and so on and so forth. Every time we've done that, the buyers have backed out, and profits are taken before the session ends. So I would expect more of the same today. Hopefully that gives you a basis from which you can form a bias, define a reasonable risk area to trade depending on what the market generates this morning, and then to take the trades and just keep your hand off the mouse, set your stops and so forth, accept your risk, keep your hands off the mouse, and stop micromanaging your trades, and just let it go. Let the market do what it's got to do. And then if you get stopped and the market's giving you another clue, it's letting you know that you're either your stop is too tight, your location selection is no good, or the context is not supporting your idea. Okay? So I'm going to leave you with that. Those of you who attended the Trader Spotlight event, the Convergence Tuesday events that was held yesterday, I will publish the video. It'll be on the Twitter feed. It'll also be on FuturesTrader71.com in the chat log and so forth. Expect that to come out before noon today. It just takes a while to render those videos, but it'll come out today, and you'll be able to watch it if you're not able to attend or had to leave early. Thanks for coming on, and I'll catch you tomorrow. Take care.